Hi guys, it is Pila here. Today we're gonna talk about why people are taking losses in the market, why traders are taking losses in the market. This one, I think it's an important topic that we have to cover. It is important for us to pay attention to this information because of it is not something that it's experienced by one person. Everyone is experiencing the same thing up until people become profitable. So what's the reason why people are not profitable in the market? Can you imagine if you will jump in on a moving trend without understanding the direction of the market? What's going to happen to you? Imagine jumping on a moving trend without checking where the market is headed. Imagine jumping on a moving trend without the pattern that you are trading, without the strategy that you are trading. What's going to happen to you? When I say in the market, you need to understand what you are trading before you start trading. For an example, let's say you want to become a trader. You want to become a trader. Therefore, it means you must pick up any price action pattern, any price action strategy that you're going to use in the market. Once you get the price action pattern, once you get the price action strategy, and whenever you're going to open any random chart, it means you're going to be looking for that pattern. It can be support and resistance. It can be continuation pattern. It can be head and shoulder. Whatever that you're going to be looking for in the market or whatever you're going to be trading, that's what you're going to be looking for in the market. Let's make an example based on the things that or based on the patterns that I am using in the market. Remember, I mentioned that in the market, I use 4 patterns only. As I am using 4 patterns in the market right now, we have jump 75 on a 1 hour chart. But I will move from jump I'll come back to jump later. I'll just go to volatility 25 index on daily chart. The reason why I'm going to volatility 25 index, this one is very much important. Why? It is because of it shows so many things that people are ignoring in the market. For an example, the market is going down right now. Some won't even understand what happened, what caused the market to go down. Sorry. Some won't even understand what is the reason for the market to change the direction. But as soon as you understand the reason behind the market changing the direction, and that's when you know that, oh, flip, the market's going to continue to the downside, or the market will reverse and go up. For an example, this is daily chart. You open a chart like this, you notice that the market is going where? It is going down. And then you jump in here and expect to move along with the direction of the market. That's the biggest mistake that is creating losses in the market. You realize that the market is going up. It is coming from the support level there. You feel like, you know what, the market is going up. You can see, you be like, okay, let me wait for the market to close above. And then once we get the next candlestick closing above, you get in, you buy. You get in, you buy, expecting the market to continue to the upside. The market goes down. As the market goes down, you assume that the market's no longer going up. It's a set. You start selling, the market goes against you. I know for a fact that so many people experience this thing, or so many people are still experiencing this thing. How to avoid this thing? You must have a pattern, you must have a strategy that you're going to be using in the market for you not to experience unnecessary losses. Losses, guys, can be avoided in the market. Losses can be avoided in the market because of the more you approach the market is the more you understand that, okay, a market manager looks like this. What is it that I need to do? What is it that I don't have to do? Right now, looking at this current trend, let's erase. Looking at this current trend, what happened there? The market reached the support level there. What was your job here? Your job was to pay attention to the left-hand side. Remember, I mentioned that whenever we approach the market, our job is to pay attention to the left-hand side. That's a topic that we're going to talk about again. Not sure when. But here, if you check, they left a break of structure there. Hence, I always said, whatever that happened on our left-hand side is what we're going to use when the market comes back. So they left a break of structure. This was your support. It was broken. They came back to test it as a resistance. This is daily chart. The market is just going down. Now, let's change the time frame so that you can see why people are taking losses. This one is a serious problem, guys. This is a serious problem that needs to be avoided. If you want to become profitable in the market, try to avoid this thing. The market gave you a beautiful downtrend here. As the market was going down, there is one individual, actually it's not even one, so many. They were like, oh, okay, the market is coming down. Let me step in and sell here so that I can go down with the market. You can tell that the market is going down based on the size of the candle. They started selling. The market went up. Umsebenzi wakho bekuthi kumele wenze njani here. Your job was to wait for the market to go back to test the supply and demand there so that you can sell. You go to smaller time frame, you'll get a break of structure there. What was your job? Your job was to wait for the market to come back and test the break of structure so that you can sell or buy. Can you see ukuthi ama-losses wethu siwathatha kanjani ku-market? Sorry guys, hey, usually ekuseni ngiphathwa yi-sinus but next time sizoyilungisa le. So now, this is the barrier that cause ukuthi abantu bangabi profitable. If you were to see here, this is 8-hour chart. If this is 8-hour chart, uyazazi ukuthi wena mhlambe you are using a trend line in the market. If you are out there trading trend line, that means whenever you open your chart, you'll be looking for trend lines. If you're out there, you decide that, okay, I personally in the market, I'll be looking for trend lines or I'll be trading trend lines only. It means when you open your chart, you'll be looking for trend line only. I don't expect to find you selling here if you are not trading trend lines. What are you trading here? The market is going down. Let me get in and sell. You'll start selling, the market will go against you. You start selling, the market go against you. You'll be like, the market is manipulating you, blah, 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 blah. Where else you know very well that you're not supposed to enter there. Because if you enter here, where are you placing your stop loss? Losses, guys, can be avoided in the market. Losses can be avoided in the market by waiting for the market to come to you. You avoid unnecessary losses. But if you're up there, you do not want to wait. What are you expecting? The chances of you becoming profitable will get smaller and smaller and smaller because of you don't know what you are doing. The minute was ukuthi uma ngivula i-chart lami like this, I see ukuthi, oh, laphayana there is a continuation pattern. Laphayana there is a supply and demand. Or let's add something else. Laphayana there is a head and shoulder. That means when you open your chart, you must be looking for a head and shoulder if you are trading head and shoulders. If you don't have any head and shoulder, that means you're not going to buy, you're not going to sell. But if you're out there trying to create opportunities that are not there in the market, what are you expecting? Let's go deeper. Those who do have my ebook, you know the supply and demand in the beginning of a new trend. The minute you notice that they left that supply and demand, the market goes down. You know that the market will go back there. That's your entry. You enter, the market continues to the downside. This is 8-hour chart. I even mentioned the last time that whenever you approach the higher time frame, guys, it's where you get something that is a bit accurate. I even mentioned to you guys that whenever you are trading support and resistance, it is important for you to understand almost everything. But if you fail to understand ukuthi imarket yakho imuva kanjani, how are you expecting to become profitable? Let me show you something again. The market is going up. We have an uptrend. As the market is going up, we reach our resistance level. The market comes back to the breaker structure. It goes up. It comes down. As it comes down, it creates a supply and demand. It goes below. And then it goes down. That is our confirmation that the market's no longer going up, right? As this is our confirmation that the market's no longer going up, we use this breaker structure to determine that the market's no longer going to which direction. It's no longer going up. Why? You have your resistance level here. This is your resistance. And then you see this structure. It looks like this. And then they break below. They'll go back up to break a structure, and then it's a sell. The market's no longer going to which direction? To the upside as it was going up. So here, you need to be careful because of, in most cases, this is where people are taking losses in the market. The market is giving us the breaker structure, the support there, right? And then there is a supply and demand there. People will step in here and sell and place their stop losses on the supply and demand. The market will just reverse and go straight to the supply and demand and take your stop loss, and then it goes to your direction. If you do not have enough experience in the market, you'll assume that the market is hunting your stop loss. The market can feel what you are doing because of why is the market not respecting the breaker structure. You were told that breaker structures are the most reliable things in the market, but then the market is breaking the same breaker structure. It goes up before it goes down. You'll even assume that the market was faking out on the breaker structure, but you'll forget one thing. If the market was faking out, young people believe which market is a faker out. Why do we have a supply and demand in the beginning of a new trend? Remember, this is your support. Your support was broken. This is for our chart. They were supposed to respect the breaker structure and go down. Instead of them going down, they went higher before they went down. Example, let me erase. This is what people were going to do. Let's highlight the breaker structure. This is for our time frame. Believing in a higher time frame, you are going to get someone entering a sell position there, and then their stop losses. For the fact that people don't like to trade on a higher time frame, they will go to smaller time frame to look for sell opportunities. They run to smaller time frame. Smaller time frame will minimize their stop loss in a tighter way like that. They enter, they sell, they place their stop losses. They don't check what happened before they start selling. The market just goes straight to their stop losses. Ah, my broker this, my broker that, my broker this, my broker that. What is it that you did not check? What is it that you did not check before you enter your trade? You did not pay attention to what happened on your left-hand side before you start selling, As soon as you start selling, it is your job and your responsibility to pay attention to your left-hand side. So as soon as you pay attention to your left-hand side, you will know that where I place my stop loss, it's where people are taking their interest because of those who are controlling the market. They know that you guys are not aware of this. This is what you'll see in most cases between support and resistance. Let's look for another example similar to this one. Sorry. Let's look for the same or something similar to what happened here. Let me check. Remember, guys, if you find this information interesting, I know that I'm gonna post this video on YouTube. I'm gonna post this video on TikTok and on Facebook as well. So if you're gonna see this video on TikTok, do not forget to like and subscribe. If you see this video on TikTok, don't forget to follow me. If you see this video again on YouTube, don't forget to follow me as well. So here, what is it you see? a break of structure. Remember, the main reason why I'm doing this video is to show you things that you need to observe when you approach the market to avoid taking unnecessary losses. Right. Remember, the main reason for me to show you this video is to assist you in a way that you will avoid taking unnecessary losses, right? So here, this is your resistance. Remember, those who come across my videos for the first time, I trade support and resistance, continuation pattern, trend line, supply and demand, and yes, I said trend line, continuation pattern, supply and demand, support and resistance in the market. So here, this is for our chart again, explaining the same thing. You'll step in here and expect to do what? To buy. As soon as you buy, where are you going to step in and place your stop loss? Accurately on your entry. You'll place your stop loss there where you're supposed to take your entry. Remember, today we still have people who analyze on a higher time frame and then they go to smaller time frame to look for entries. You go to smaller time frame, you'll get a perfect entry that will tell you that your stop loss is supposed to be accurately or tighter. You enter, you're expecting the market to go up. You are failing to check what is it that happened before they break the resistance. That's the $1,000,000 question that you're supposed to be asking yourself when the market is approaching the resistance. When the market just broke your resistance, you know that the market's supposed to come back and test the resistance, right? As what? As your support. The market went up. It closed above. It went back to test what? The broken resistance as support. That's your entry. As you're going to be taking your entry day, you now know that the market's no longer going where? Down. It is going up because of the resistance that was broken. We're supposed to get our support. That means we're supposed to be buying. In this case, your job is to check what happened before they break the support, what happened before they break the resistance. So here, your job was to pay attention to what happened there before you enter here. Once wakwazi uku-approach imarket yakho ngale ndlela ngicela ungithembe, you will avoid ama-losses, or you will, I want a proper word, you will minimize the number of losses. This is what they're doing between support and resistance. Let's erase. Here's the continuation pattern. Those who don't know what a continuation pattern is, I assume that you guys, you come across my video for the first time, or else you don't have my ebook. Again, the market went up. Sorry, this is for the market went up. What do we have there? Move to your left-hand side. Again, resistant. It comes from the left-hand side. Resistant, resistant. The market came back to the resistant. As the market is reaching the resistant, I said to you guys, according to my experience in the market, whenever we are approaching the resistance, and if the resistance or the support has two touches, they are higher the chance that they're going to break that the resistance. So they respected the resistance there for the third touch, and then they pushed the market down. As they were pushing the market down, what happened? A continuation pattern happened there. A break of structure happened there as well. So these are the things that you must learn. For you to know how to be safe in the market is to avoid jumping on a moving trend. You know what I can see? The size of the candlesticks are very strong. It's a buy. You go hard here. You do the backward trading. What do you guys usually say? No, but what do you say? No risk, no Ferrari. You go hard here, expecting the market to continue. The market goes down. Flip, the market's no longer buying to sell. You start selling, the market's roughly there. The next thing, the market goes against you. The minute you jump in on a moving trend without knowing what is happening, you are dead. Remember, the more you step in and trade what you know is, the more you'll become profitable in the market. Now, these are the things that I want you guys to understand. These are the things that I want you to understand. The market is moving down here. right? There is your resistance level. That's your resistance level, sorry. As that is your resistance level, it means the market will come back down, right? It went down, it left a support there. The support was broken. They went down, they came back to test the broken support as a resistance. The reason why I'm showing you this, you have people who will just like to jump in. Ah, it's a sell. Looking at the candlestick, it's a sell. They started selling, the market went against them. They started looking at their left-hand side. Oh, it's a support there. The market's on the support. It's a buy. They start buying on the broken support. The market will go down. They will expect the market to go up. The minute you don't know what you are doing in the market, everything is stayed. As noma ngiyibeka kahle. But uma wazi ukuthi, okay, fine, if I open my chart, this is what I'm looking for. You will know that the higher the chance that you're gonna become profitable in the market. All right, guys, do not forget to like and subscribe, and also leave a comment for me so that I can come back and check the things that you want me to talk about next time.